Hey everyone, welcome in to another daily editorial here on the KE Report. We're chatting with Jordan Roy-Byrne, founder and editor of the Daily Gold. Now, Jordan, initially, let's focus on gold and silver because right now, what I'm seeing is gold back under 1,800, silver back under $20. This is after what has been a fairly short-lived rebound in both of those metals that also tied to a rebound in pretty much all other financial assets. But again, in terms of gold and silver, gold under 1,800, silver under $20, what is most noteworthy in your eyes, and what is the chart saying?
Well, I think what's most noteworthy right now, I mean, the week is not over yet, but it looks like for gold and silver, we're going to be printing some really ugly weekly candles where, they both were really, really oversold, extremely oversold 3 or 4 weeks ago. And they've had a bit of a rally, but again, that would be my concern if, unless there's some huge turnaround here in the last half of the week, we can just see these bearish reversals in the weekly candles for both. So that's a concern. And so gold's back below 1,800, and in that scenario where they made a bearish weekly reversal this week, it's going to in that case it's going to be hard for gold to avoid retesting 1675. And so I think that's probably the near term scenario. And looking at silver, silver's chart is really, really ugly. And if you look at the gold silver ratio, silver's been underperforming gold pretty solidly for a while. So that gold is clearly outperforming silver. That ratio is trending higher. Gold has started to outperform oil. I believe it's made a little bottom there and it's broken above the 200 days. So we are seeing in real terms, gold is still holding up. But just looking at that scenario where we know that gold is outperforming silver, we know that there's a case to be made that gold could have to retest its low. That would augur not so well for silver, which is underperforming gold and has been weaker the entire time. And so looking at the chart of silver, I mean, it bounced off of 18, but there's a possibility that the bounce failed around 21. I mean, the hope was that it could get to 22. And so if over the next week or 2 weeks, if silver can't recapture 21, and it looks like there has been a bearish weekly reversal this week, that would augur for more downside. And just stepping back, silver has put in a really ugly top over the last not 2 years, but I mean 18 months or so since it peaked in August 2 years ago. And it's a comment I made to premium subscribers about a month ago or 3 or 4 weeks ago that there is a scenario where you could see silver, going down to 14 or 15, because if this level in the mid to upper 18s doesn't hold, if this isn't the bottom, the next really strong support is at 14 or 15. And there's just so much technical damage on the long-term chart, because of that 18-month top, that the next, that would preclude, the odds of it, going lower and below that 18 support would be higher. And so the next really strong support is at 14 or 15, like if we're looking at a monthly or a quarterly chart. And, if we look at the way the gold silver ratio is trending, and if we see gold break 1675, that's a whole nother question, the significance of that. But I did have a potential measured downside target of 1600 for gold, and that could potentially align with 14 or 15 for silver. So I know there's not a lot of direct comments on everything, but that's how I'm looking at the situation. Is if we don't see a huge Fed pivot in the next month or so, and if the stock market continues to hold up, and the economy doesn't fall apart quite yet, and the Fed can tighten. I mean, even if they pivot in November, it's like, well, that's 3 months away. That's still a lot of time for metals to get flushed here before, potentially major bottom and an end to this, 2-year decline.
Well, Jordan, I appreciate you at least providing your technical outlook on it. And if that 18 level falls in silver, it goes down to 14 or 15. Or if that 1675 level falls in gold and it gets down to 1600 or a little lower, the miners' margins are going to be compressed even further. So, do you have an outlook on where the support would come in for something like GDX or GDXJ in light of those metals pullbacks?
Yeah, I have been looking at GDXJ. This was like a month ago or so. I've been looking at in the mid 20s. I think around. I don't have the chart in front of me, but there should be really strong support. I want to say around 25, maybe 26. There's also a gap somewhere in the 24s. So in this scenario, and I'm just putting out a scenario here, obviously I could be wrong. We can't see the future. That's potential, in this scenario where we see gold go below 1675, that's potentially an area of not potentially, that is an area of strong support for GDXJ. For silver, for GDX, I'm not quite ready to say. It would just take me a couple of minutes to go through my charts, but that's something. That's the target that I've noted in some of my past updates. So that's an area to key on. But obviously, we'll see what happens here over the coming weeks, because the other scenario is we see a double bottom in this sector where gold doesn't break 1675, and then in these miners charts you have double bottoms emerge, and so that's another scenario. I'm just looking at all these scenarios, but we can't rule out a real washout before a major bottom, before the Fed is forced to pivot.
So, Jordan, if you take a step back and if you have to label gold, silver, or the underlying stocks, are you viewing this as a full-on bear market, or is this, again, just a correction within a bigger picture bull market in your eyes?
It's a really good question. I think the problem with the bear market question is when that comes up, it can kind of be a sentiment indicator, because everybody, myself included, 2 years ago, we're correcting, we're in a bear market, we're in a bull market, it's a correction in a bull market. Then the market just goes lower and lower. It trends lower and lower, and everything's getting really oversold. And then finally we realize, this doesn't really feel like a correction in a bull market. So I don't have a really good answer for that. And the reason is it really depends on what's going to happen with the stock market and the economy, which I think the stock market has had this good rally. I think maybe it will rally some more because breadth is really strong, but I don't see some new economic expansion beginning or some new bull market. I think the odds of that are really, really low, and so at some point the Fed will have to pivot and probably cut rates, and it's just a question of, it's possible that could happen in the next month or two, but it's also possible maybe it happens in 4 or 5 or 6 months, and then in that scenario you could just see a lot more damage in this sector. So I don't. It's just, this is such a different sector that always categorizing it as being in like a bull or bear market, I don't know if it's that helpful. I will say that obviously, I've mentioned this before, the real key in the big picture is gold breaking above 2070 or 2100. And so we're not in a real bull market. Like, we're not in a secular bull market for gold until that happens. So that's one thing I can tell you. Like, are we in a secular bull market for gold? No, not yet, because the stock market, in recent years has trended much higher and has outperformed precious metals. So in a secular sense, no, we're not. And just look at silver. As I said, the chart is really ugly. Same thing with the gold. Well, the gold stocks are not as bad as silver, but the chart for silver is really ugly. And so, those are just examples of why you're not in a secular bull market. And so that's what it comes down to over the next couple of quarters. Do we see the stock market make lower lows? The economy goes into a real recession. And in that scenario, at some point, you're going to get the Fed shifting policy. And I think that's when you could see a real bull market begin in precious metals and a secular bull market begin. But here and now, that hasn't happened yet. And until we get to that point, this market is not, or this sector is not in a secular bull market. And so the difficult thing now is that, gold was able, over the last 5 or 6 years, gold in the stocks as well, and the stocks a lot more so than silver, they were able to trend up for 4.5 years or whatever it was. I mean, because gold had a lot of room to move from, 1050 or 1040 up to the $1,900 high. There was a lot of room to recover there. So that happened. Surprisingly, with the stock market still being in a secular bull and trending much, much higher. But the problem now is, there's such limited upside for precious metals now without, gold breaking that major resistance and going into a secular bull market. So I know that was kind of an evasive answer, but that's how I'm thinking about it right now. It's just, that's the key at this point, because we're so close to a secular bull, 1800 versus breaking above, 2000 or 2050 or 2100. We're so close that's really the focus. And so I would say, no, we're not, we're obviously not in a secular bull until, gold breaks above that level, or until we see the stock market lose the recent low on the 40-month moving average.
Okay, Jordan, let me follow up on that question then, because I was more gearing it towards the shorter term traders. If this is a bear market, then you should be taking, I think, a more defensive strategy and selling any pops. But if this is a bull market, but just a correction within, then you should be accumulating on these drops and not worrying so much about maybe selling on any pops. That's what I meant. So in terms of trading strategy, are you doing anything different with your trading strategy within the stocks?
Well, a couple of weeks ago when we got really, really oversold, I bought some positions. I don't have a ton of cash, but I bought some positions. But I'm not, since I bought positions, I haven't been adding to anything. And I've mentioned to subscribers, we could see a lower low coming. So, there could be another buying opportunity coming. That's where I'm at. I mean, obviously, from a trading standpoint, you're probably going to see a lot of, well, today is an indication, but a lot of traders who bought in are probably taking profits because they don't, their stops are getting hit, or they don't think the sector can hit these targets, or can, they don't think silver is going to go to 22 or GDXJ is going to go to 37. So we see a lot of traders selling out.
Okay. Well, Jordan, I'm just going to throw one other wild card at you here. This kind of ties into the general equities versus the precious metals. As you were outlining, if we want to see a real bull market in the precious metals, they need to diverge from the general equities. But there's a confluence of events coming up just about a month away that could set up a scenario where some people panic out of the general markets and into precious metals. I just want to run it by you. In September, we've got another Fed rate hike coming up. Could be 50 basis points, 75 basis points. I think most people are expecting some hike. But there's also a quad riching coming up the third week of September. And often September and October are seasonally some of the weakest months for the stock markets. There's often that September surprise, or October has been a rough month. So there's a lot of people that think we could see a rally, some of the generalists we've talked to, that we could see a rally in the general equities maybe for another month or so. But then they may start running into their own resistance. And if that was to roll over hard, couldn't there be some migration of capital from the general equities into gold and into possibly silver as a safe haven aspect if it was to get ugly in September? Couldn't that be an area where things could diverge?
Okay, well, first of all, number one, whenever there's like a prediction in terms of time, it's really always dubious. People looking ahead and saying, oh, well, on this date, this is going to happen. So that's really dubious. Secondly, I mean, I think the key is you need to see a rollover sooner rather than later to protect precious metals from having this like waterfall decline over the next month or two. Because if it's going to happen at the middle of September or the end of September, I mean, there's still there's time where they could decline here and make lower lows. And so, I mean, that could be true, but even in that scenario, maybe you see gold hold up okay for a little while, but you still could see the miners and silver getting hit. And now, if we're going to see, like, if you would tell me, okay, the stock market is putting in a peak today or a peak yesterday, then that would be, and it's going to roll over significantly. That to me would be positive for precious metals, because in that scenario, you probably would see gold hold above 1675, and maybe the miners make a lower low, but it's a false lower low. So that's how I look at it. I just think, thinking of a specific time and thinking things are going to turn. I mean, everybody knows about the witching thing at this point. That's already probably in the market. But if we do get a hard rollover of the stock market, that's going to force the Fed to pivot. Yes, that would be bullish for precious metals. And then at that point, I would be less concerned about the technicals. Sure, you would have a lot of technical damage in precious metals, but if you tell me we are going to see, the stock market's going to roll over hard, you're probably going to see, which would indicate the economy is probably rolling over to recession. That to me would be really good for precious metals, and I would be less concerned about the technical damage at that point. So yeah, it comes down to how fast is the Fed going to shift policy. I mean, if it's going to happen in the next month or two, obviously that's going to be more positive for precious metals than if it happens in 4 months, where they can potentially get off 2 more hikes. That would be obviously more negative. There'd be more room for selling.
All righty. All right, Jordan, we're going to wrap it up here. Look, I understand that it's been a pretty depressing year for precious metals investors. A lot of investors, it's been a tough year. But this recent rebound, too, if that's all we're getting, if the market's starting to turn over again for the precious metals, that was a pretty weak rebound. So I do understand some of the more negative aspects of that chart, but hey, hopefully something happens. Hopefully there is some catalyst that can turn that market around for all of our investments. Jordan, thank you as always for your time. We'll chat again next week. Have a great rest of your week.